I think it could be really easy to get infatuated with like a 1 hour pattern or something that you're looking at.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are some trading psychology rules that you never break?
The biggest one that I have is to allow, like when I take a trade, I need to allow myself to have a loss. So when I take a trade and I'm calculating out what the risk is on the different accounts, I always know, okay, this is money that could be gone. Like, you know what I mean? Like I didn't always do this because I used to like keep moving. One of my biggest things when I was early in my trading was I would move the stop over and over. So if my stop was at 121.00 and I saw it coming down, I would move it to like, okay, 120.80. Okay, 120.65. Like I'd keep moving it and I'd stay up all night watching it, like hoping that it would reverse, during the New York session or whatever. So when I go into a trade, my mindset, in fact, I'll calculate the risk as such. Like for example, if I have an open trade and then I have a new signal, I will calculate the risk of the open trade as a loss, so that the new trade is calculated on that balance, not on, what the equity, where it is now or whatever, right?
Yeah.
So I mark it as a loss. Open trades are marked as a loss before I do my new trade. So that's the biggest one, is that I count risk capital as goodbye. Now I hope for the best. I don't think the worst. I try to be as positive as possible. I try and envision scenarios where if I'm a drawdown, it'll go in my way and stuff like that. So that's definitely true. But I consider that like goodbye money. Okay. And then it's a pleasant surprise if it goes the other way. The other one is that revenge trading was the other big one for me. So like I would like go, oh man, that bloody Euro yen took me out again. So I'm going to get back at the Euro yen and I'll double down or whatever, like martingale style trading or whatever. I used to do that sort of stuff. Not as bad as the moving the stop loss. It was there. It was definitely there. It was almost like I thought of each currency as like a person and I want to get back at it. I don't know if you've had that. So yeah, so those are the biggest ones. The other thing is really important for me is I don't want to trade drunk. And I don't want to, because I made that mistake too. Like, coming home late on Thursday night. I used to actually drink quite a bit, like in my 10 years ago or whatever, or 15 years ago. I hardly ever drink now. But so there was a problem where I would come home and I'd be like bored. I didn't have a TV or anything. So I just fire up the trading station and have a look and go, hey,
that looks good.
Yeah, that looks good. So that was terrible too. So don't trade under the influence. I don't move my stop losses. So related to the trading under the influence is to be in the right mindset. So you can use like meditation, hypnosis. You can use different devices. Like we talked about the neurophone. You can use binaural beats, to get yourself into alpha or theta, so that when you're watching your charts, you're in a good mindset. I really don't like to be upset. If I just got in an argument with somebody or, the kids are just driving me nuts or whatever, I don't want to sit down and start, locking in trades into my platform at that stage. I really like to have more of a pattern of relaxing, going through my meditation, and then sitting down. And it's good because where I live, I don't really have to look at the charts until about 10:30 in the morning, really. I mean, it's just the Asian session. Not much is going on, interbank market's over. So I kind of set my trades up in the morning by around noon, maybe, depending on the time of year, the clocks change in Europe and the US, but basically, early to late morning, like mid to late morning, so I have time, I know it's not the case. Like some traders, if you live, for example, in California or Washington State or whatever, you might wake up and go, like I got to go see where my trade is because New York is raging, right? Even if you get up at like 5:30 in the morning, New York is on, and you got to go and see. And so I understand, like might not necessarily have that luxury. It's really hard. Some traders, what they'll do is they'll just have a quick look and then they'll go through like their meditation or whatever. So that could possibly work as well. But so those are the big three rules. I'm curious to hear what yours are though.
Yeah, it's funny you bring up the trading drunk thing too. I had that a couple of times, and yeah, that's one of mine. And it's more about the mindset that you're in, right? Not necessarily drunk, but at least good mindset, a little bit of meditation, using the Inner Balance app or whatever. Second one is like a 2 strikes rule. So I allow myself 2 strikes on one trading idea. If that blows up, then I stop doing that. And then the third one is,
can we dig into that real quick? Can I just ask, so when you say 2 strikes for a trading idea, is that like as simple as I'm going long the Swiss yen? And so I went long yesterday and I got stopped out, so I can go long today again on another. Is it like the same signal, or is it, I guess what I'm asking, is it different signals or the same, you know what I mean? Like, how does that work?
Yeah, I guess it depends on the strategy, but it's more of like, the same direction on the same pair.
Oh, okay. Yep.
Yeah.
Okay. Got it. Yep.
Yeah. And then the third one would be just taking a break when I feel burnt out.
That's a big one. I don't have, that's a big one, man. Like, people who are listening, that's a really big one. I don't have that problem like I used to, but I did have that problem. And the biggest thing that got me was when like the smartphones came out. And yeah, man, I had this little, like, it was almost like a square phone. And it had like early MetaTrader on it. And like, I would be out to dinner with my wife and I would be looking at the phone, like checking my trades going. And then I would micromanage them. And it was a big one. And now it's even worse. Now you have even more abilities to take trades and manage trades than back then. Back then it was actually kind of a pain to do it. I'm talking about
all that stuff. Right?
Yeah, exactly. Yeah. Like back in 2007. Yeah, like back in that area, 2006, 2007, I think is when. So now it's even worse, obviously. But yeah, and you like, what happens when you lose your stylus and all that stuff? Yeah, like that's crazy. Yeah, totally. Yeah, that's a big one.
Yeah, and sometimes I might take a break for like 2 weeks, a month, sometimes. But whatever it takes, right?
I have a question. Do you find that like if you're away, let's say you take a long weekend, well, actually, where you live, the markets close Friday morning, right? Or Friday afternoon. Yeah. Friday afternoon, they're closed, right?
Yeah.
So 5 p.m. New York time, basically. So do you find, let's say that you had a long weekend and you're traveling and you don't see the charts. Let's say you leave Thursday, right? So you don't really see Friday, what London or New York did. And then you get back, say Tuesday. So you don't see Sunday or Monday. So you're kind of missing like 2.5 days. What do you find when you get back and look at the charts on that Tuesday? Like if you have like a break, if you've had a break that long, where you just didn't get a chance to see the charts, what do you find?
Either I'm in tune with it from last week, or I'm like totally out of tune. And in that case, I might not trade for the whole week.
Right.
But it just depends.
Yeah, I find that the fresh eyes is a good thing. I just feel like you kind of get it's like you get these theories in your head about certain pairs where they're going and stuff, and then when you watch it, you can almost make it fit. Like you go like, oh, I think the euro's on a tear. It's going to keep going higher. And then like I wake up in the morning, oh, it's gone down. Well, that's just a pullback, right? Whereas like if I come back like 2 days, like a long weekend is the classic. Long weekend, come back, don't even check or anything. And then I look and I go, oh, that wasn't a pullback. That was a double top or whatever. You know what I mean? Like I just find that the fresh eyes, it's almost like the less time I have in front of the screen, the more obvious it becomes what the market's doing. And I don't know if other people have that or what. It's just really easy, I find, to get into that thing where you're using the evidence of the chart to fit your theory of what you think is happening.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So I think it's good to have multiple theories. Like, well, it could be a pullback, but it could be a double top if it does this. Well, it could be going up, but it could have just actually reversed if it did that, or it could be consolidating and it could be bouncing off the top of the box, but actually it could also be breaking out right now. So I don't know. I was just curious how you had, like, what that had done for you, because it really is obvious to me. If I spend time away from the charts, boy, it is such an advantage because I'm not stuck. I'm no longer stuck in the in those ideas that I was a slave to before. So
Yeah, no, I think it can be really easy to get infatuated with like a 1 hour pattern or something that you're looking at, and when you're really training the daily chart, but you get stuck on that, and you're like, oh, it has to go because this and this and this on the 1 hour, and then you step away and you come back and you're like, oh no, that's just noise, and
yeah,
so.
It's true, man. It's so true. Yeah.
Cool. All right, thanks, Walter.
See ya.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.